Intro. The AI boom has been powered by raw compute, racks, clouds, and huge data centers rented by the hour. That model helped the field scale fast, but it also planted a hidden vulnerability. Most AI systems today run on infrastructure they don't control. If history teaches us anything, it's that dependence creates leverage. Bitcoin showed how decentralization can wrest back control from entrenched intermediaries. Decentralized AI is the next logical step. Not just a technical curiosity, but a survival strategy for the next wave of innovators. AI's current fault line. Rented compute. Many startups built their products assuming compute would always be available on demand, at predictable prices and under fair terms. In practice, rented compute creates a host of problems. Platform providers can change pricing, limit access, or impose rules that reshape a company's business model overnight. That single point of control also means single points of failure. Outages, vendor lock-in, and supply shocks translate directly into downtime, lost revenue, and brittle systems. Beyond economics, rented infrastructure raises privacy and security concerns. Sending sensitive data and training pipelines to third-party environments increases exposure to breaches or misuse. It also concentrates incentives. The few companies that run the clouds gain disproportionate influence over what can be built and who benefits. Why decentralization matters for AI. Decentralized AI reframes the problem. Instead of buying hours on someone else's machines, networks of nodes contribute compute, storage, and governance according to open rules and aligned incentives. That distribution reduces single points of control and failure. It enables peer-to-peer markets for compute, transparent provenance for data and models, and collaborative mechanisms that reward contribution rather than gatekeeping. This isn't just about technical resilience. Decentralization changes incentive structures. Contributors can be compensated for providing resources and data. Communities can govern model updates, and users can maintain more control over their own data and privacy. Consensus mechanisms, cryptographic proofs, and privacy-preserving techniques, like federated learning and secure computation, help ensure integrity without surrendering control to a cloud landlord. Practical realities and the transition path. Decentralized AI isn't plug-and-play yet. Latency, orchestration, model lifecycle management, and regulatory questions are real obstacles. Expect hybrid approaches first, models trained in part on pooled rented compute and in part on decentralized resources, or orchestration layers that transparently shift workloads depending on cost, latency, and trust. Interoperability and open standards will be crucial. The more portable your models and data formats, the easier it will be to switch providers or hop between centralized and decentralized infrastructure. For startups, the practical steps are straightforward. Design for portability. Avoid vendor lock-in, favor open interfaces, and explore privacy-preserving methods that let you leverage distributed nodes without exposing sensitive assets. Tokenized incentives and reputation systems can help bootstrap reliable supply for compute and data, but they must be designed carefully to avoid perverse incentives. The long view. Survival and opportunity. Platform landlords won't disappear overnight, and rented compute will still have its place. But if history repeats, power moves toward the architectures and communities that minimize centralized control and maximize resilience. Bitcoin's legacy isn't a specific protocol. It's the demonstration that systems can be built to resist single points of capture. Decentralized AI applies that lesson to the compute, data, and governance stacks that modern intelligence depends on. For AI startups and builders, decentralization isn't a novelty. It's insurance. It reduces existential risk from external providers and opens new business models based on shared resources, community governance, and aligned incentives. Those who prepare for this shift now will gain strategic flexibility and long-term viability as the industry matures. Closing. The choice is clear. Keep renting infrastructure and accept the fragility that comes with it. Or invest in decentralized patterns that return control to builders and users. Bitcoin taught us that decentralization can scale and survive. The next chapter is about making AI resilient in the same way, distributed, incentive-aligned, and built to outlast any single landlord.